Hello everyone, welcome to my YouTube channel. My name is André Cardoso. Thank you very much for being here and thank you for following on Twitter and on TradingView, which I invite you to join this amazing platform. It's a platform that I use to make my analysis, and it can be used as your also as your trading journal. So I'm here to share my views inside the market with you. I'm not here to suggest you to participate or to get involved. That is up to you. So you need to be responsible for your own trades. So I'm here to share the patterns the market tends to print for us, and how you trade them. It's your own responsibility. So this may act as a disclaimer. So, as you know, or at least some of you already know, I search for advanced pattern formations inside the market, and I'm here to share those views with you. And let's start with the cable on a daily time frame. So the cable has printed a bearish pattern at 132.73. So this is the 88% Fibonacci retracement. So basically this is a default bearish pattern completion point. As you can see, the market has found some resistance below the starting point of the pattern, which keeps validating the shorts for this bearish pattern. The default target for the cable at 126.91 or 92. So this is the default target for the bearish pattern. So as you can see, we are now threatening this ascending trend line as a potential support. On a lower time frame, I was expecting a bounce. It can happen if the market rejects to violate this daily fractal support printed at the bottom. So if the market decides to bounce without breaking these lows, it is possible to form that shark pattern above. So basically, if the market decides to print new highs, 132.02, so this will be the bearish shark pattern completion point. I'm not sure of, obviously, if the market will achieve those levels again, but we should not be surprised with kind of a retest of this minor, or let's call it a lower degree and previous structure support trend line. So basically a trend line holding those lows and retested as a resistance above. So if cable decides to bounce from these and from these levels, and if it reaches those levels, if 132.02, it will complete a bearish shark pattern. So basically, I will pay attention to that possibility. Obviously, for those who have shorted that pattern, we're still waiting for the default target, the 38% Fibonacci retracement level, to be reached. So euro versus dollar, also threatening a trend line support. Let me show you on a daily time frame. We have also, I published it before. I'm not sure if I shared this on my previous video, but we were very close to complete the bearish shark pattern at 168 extension. The market has failed just by a few points, with finding resistance a few points below. So basically, the market has started to fall without completing the pattern just by a few points. On a 2 hours time frame chart, we're still threatening that next zone for these head and shoulders. So violating these most recent support levels should trigger more downside momentum for euro versus dollar, without ignoring, obviously, that this 13 minutes time frame bullish shark pattern completed at 224% Fibonacci extension. So basically, I want to see if the market bounces from these levels before breaking support. So if the market decides to go directly below the daily fractal or below that recent 4 hours fractal support, if the market decides to break below, it will trigger the edge and shoulders, and the default target for the edge and shoulders may put the price retesting these monthly fractal resistance. So this is a default projection for these major edge and shoulders pattern formed above that support level. So I'm expecting more downside momentum for euro versus dollar, but without ignoring a potential bounce from this price zone. Aussie now trading below this ascending trend line. It was a trend line holding those lows between June and then reinforced later at 25 August. A false breakout below September 8, and then recovered, and we can see that trend line acting as a potential support there, violated again, and now finally the market has decided to sink below. We're still trading above that daily fractal, that previous horizontal support level. So basically, based on the Fibonacci criteria or variables presented, I will not be surprised to see, well, there are three options. One of them, the 88% Fibonacci retracement as a bullish bat pattern completion point, which I doubt it's the objective at this point. One eventual alt bat pattern right below the fractal as a false breakout below. So usually the alt bat pattern will act as a false breakout below the support or above resistance. And if that fails, we will see a crab pattern extended to 1797. So this is the golden Fibonacci extension. If the market decides to violate this daily fractal, I think the market will, or I think the market may sink into this price level and eventually a retest of this monthly fractal resistance, which may act as support, obviously. So now the Kiwi, I shared this bearish cipher pattern there at 78% Fibonacci retracement. As you can see, the market has filled some of the default expectations for that pattern. So the market has achieved the default targets, reinforcing one trend line support also. So Kiwi is also threatening a violation of that trend line support. As soon as the price starts to approach these previous highs, I started to project, okay, if the market decides to trade above that fractal, it will print me that bearish sharp pattern at the golden Fibonacci extension, and I will pay attention to that possibility for new shorts for the Kiwi. So basically, the price failed to complete that pattern. On a daily basis, we are also on a daily time frame. We are also, I shared before this pattern or these ratios. So basically, we have the 88% Fibonacci retracement as a default bearish bat pattern completion point. Actually, it was right there. 88% Fibonacci retracement, actually not there, I'm sorry. This one. 88% Fibonacci and 113% Fibonacci extension as an alt bat pattern completion point. So basically, we are trading between those levels. I'm expecting bearish momentum for the Kiwi. If we need a default projection or a default target for the Kiwi, I need to set my retracement there, and the 38% fib 62.90. So this will be the default target or the default expectations if the Kiwi decides to keep trading lower. So basically, we are threatening those monthly and weekly fractal resistance levels, and obviously this trend line support. So if the market decides to break below, we may see more downside momentum. Actually, the market is now threatening the most recent support, horizontal support level. So trading below that daily fractal and that weekly fractal support right below, we may see the Kiwi trading even lower with the default targets for the major pattern projected below. Australian dollar versus the Kiwi. Also another sharp pattern printed at 160 on 224% Fibonacci extension, then a few extended above the completion point, one technical double top, triggered below this now the daily fractal resistance. It was printed there most recently. But this was previous structure support, the next zone, and then a retest of the next zone and a fall into the default targets for the pattern. Actually, the 200% Fibonacci extension being reached after a bounce and a new low reaching that default expectation or the default target for the technical double top. So as we can see, we are already trading the default targets for this shark pattern. So basically the 50% Fibonacci retracement, it was a default target for the pattern, also reached after a bounce and after the formation of this daily fractal resistance. I was expecting something like a symmetrical ABCD pattern. So actually I was expecting initially the bearish 2618 trade setup. Basically it's a double top followed by the retracement. So we have, let me try to print that for you. So we have the technical double top validated below this next zone, and then we have a support and a bounce, and this bounce, if the market achieves the golden Fibonacci retracement level, that will print the 2618 trade setup. And usually we search for a symmetrical behavior, so an ABC, kind of an ABC, a three-wave structure where AB is equal to CD. So basically the default projection for one symmetrical pattern projected at 10707. So this was the default symmetrical projection that I shared yesterday for this Australian dollar versus the New Zealand. New fractal support, we are already threatening the previous structure support level as a resistance, so daily and weekly fractal right there as a potential resistance price zone. So I will not be surprised with more downside momentum for this pair. The dollar versus the Switzerland versus CHF, another technical double top, double bottom here. This is a kind of actually, let me push this into a 12 hours time frame. We have this bullish alt bat pattern actually at 113% Fibonacci extension, a technical double bottom right there, and a violation of the next zone. So basically the next zone was positioned at 191.63 basically, or very close to that level, and breakout above triggering the validating the double top. So I'm expecting more bullish momentum. So as we can see here, the market has found some pressure at the golden Fibonacci retracement, completing and forming the bullish 2618 trade setup. So the same way that I was expecting for the Australian dollar versus the New Zealand. So I'm expecting now the formation of one potential symmetrical ABCD pattern at 92.52, so or just a few points below the 127% Fibonacci extension. So let's wait and see if that will happen. The Canadian dollar also with one inverted edge and shoulders, a nice reaction from the 88% Fibonacci retracement, forming the bullish bat pattern, and then the eventual inverted edge and shoulders, because we are now threatening the next zone. So we need to break out above 132.59, 132.60. So basically that will trigger the inverted edge and shoulders, the default target for the edge and shoulder at 134.76, and the default target for the major bullish bat pattern at 136.35, so right below the weekly fractal resistance. So a retest of that fractal will not be a surprise, taking in consideration the default expectations for the bullish bat pattern. The same may happen for the Norwegian krone. We have also a nice confluence between this lower degree bullish scrap pattern printed at 161.8 extension and this daily oops, I don't have that pattern drawn here. Let me try to show you that. So I need the 88% Fibonacci retracement there, and the pattern that I was expecting to be formed was this kind of a bullish pattern at 88% Fib. Again, a new fractal, a new weekly fractal below the completion point. Actually, the market has found support below the starting point of the pattern, threatening the invalidation of the pattern, but completing also these minor bullish crab pattern at 168 extension. So we have also a potential edge and shoulders here, with default targets for the edge and shoulders at 963.53, and without ignoring obviously this eventual shark pattern territory at 932.600. So basically we have a bearish shark pattern here, which we should not ignore. Eventually the market will may find some pressure around that Fibonacci zones or that Fibonacci cluster zone. We have also the golden Fibonacci retracement between those weekly fractals, so that may offer some pressure. But again, the default target for the inverted edge and shoulders projected above, so, and that shark pattern can also extend to the 224% Fibonacci extension. Actually the market can find pressure on both of those levels, the 168 extension, a retracement, and then the 224% Fibonacci extension above. So let's see how the market will react initially at 932.600, and then let's see how the market will behave from there. The dollar versus Mexican peso, I also shared these charts before. The potential shark pattern at 168 extension, this brown or this orange Fibonacci extension there, and one bullish butterfly pattern printed at 2098. So basically I was expecting that reaction after the formation of this bullish butterfly pattern, converging with the major shark pattern. So basically the shark pattern can be pushed to the 50% retracement. So I'm not expecting that huge momentum for the pair at this point. I'm targeting the 38% Fib. In fact, my initial targets, considering this bullish butterfly pattern, it's positioned at 21.75, and then if the market decides to achieve that target for the major shark, or the minimum expectation, let's say, because the default target is a 50% retracement level, but I will target that this weekly fractal resistance printed last August the 4th. So basically I will expect for this for more upside momentum for dollar versus Mexican peso. Also nice convergence there between those patterns. So the dollar versus the yen, another one with this one with an edge and shoulders formation. Edge and shoulders formed above this weekly fractal, the weekly fractal acting as a potential next zone. As you can see, the market has found some support right below the support, the previous weekly support, and then it has retested the weekly fractal as a resistance and then new low. So we are actually a nice bounce from these previous structural lows, actually a few points below the previous structural lows, and now we are bouncing from these levels. At this point, let me just confirm what I have shared before for dollar versus the yen, or at least most recently, the crab pattern exactly. Let me just sync this with my previous chart. I will search for the 161.8 extension from these highs, this fractal support, this fractal resistance to this fractal support extended below 161.8% Fibonacci extension extension. Let me just confirm that because it's something may not be correct here. No, the pattern that I have shared was an extension, exactly, an extension to the 160-8 extension, the bullish crab pattern printed here. Let me just confirm the price. 104,361. 104,361. So that was the pattern, the bullish crab pattern projected at 168 extension. So basically, as you can see, the dollar versus yen has found some pressure very close to that Fibonacci zone and completing the pattern. So we can expect a retracement back to the 38% fib. Those may act as resistance, and in fact the market has almost nailed that Fibonacci retracement, and it has recovered again, and it has started to fall again below these levels. So default target for that crab pattern almost reached. We have also one descending trend line support, which I will not be surprised to see a retest of that trend line. So let's wait and see what will happen for dollar versus the yen. Euro versus yen, I shared this chart on TradingView. I published this as a public chart, the eventual heads and shoulders for the euro versus the yen. As you can see, we are trading very close to these default targets. We are also threatening the monthly fractal resistance right there. So on a 2 hours time frame chart, I published this sharp pattern projected at 224% Fibonacci extension, so 122.87, and I was expecting the formation of that pattern and some pressure at this price level, at this price zone. So I was expecting a bounce from these structural lows, and the default target will suggesting a retest of the previous structure support level, or a reinforcement of the most recent fractal resistance printed at 124.31. So that is the default projection, or the default target for this shark pattern printed at 224% Fibonacci extension, and right above the default target for the heads and shoulders. So I will not be surprised with a bounce for euro versus the yen from this price zone. So pound versus the yen, I shared this eventual butterfly pattern. As you can see, the market has found some resistance a few points below the completion point, so I was expecting some bearish momentum for the pair, but I share these once the price completes this symmetrical kind of a three-wave structure, a symmetry. As soon as the market feels that symmetry, I publish that chart. Okay, we have the butterfly pattern projected there, but it doesn't mean the market will complete that pattern, and we are also facing that potential symmetrical behavior. So I will not be surprised to see a retracement. So we are now trading between the 38 and the 50% Fibonacci retracement level as default targets for the butterfly. Even without completing, I will expect some pressure at some of those Fibonacci retracement levels. So it's too soon to predict at this point. Eventual shark patterns projected at 125 and 118. First of all, we need to wipe out this weekly, or to vanish with this weekly fractal support. If the market decides to start to trade below this fractal, I will put my highs on these price levels, the previous monthly fractal support level, because the market will complete, or may complete, this bullish shark pattern at those levels. So I'm expecting more downside momentum also for the cable versus the pound versus the yen. Let me show you this weekly chart. Actually, let me just push. Let me try to show you my previous the chart for Australian dollar versus the yen. Let me try to show you my weekly chart. Where are you? I'm trying to find here. Let me show you some of those charts weekly. Not this one. I think it was most recent. No, I can't find it here. Let me just confirm. No, by date. Okay. Daily. Okay, it may work, this one. This one may work. Let me open this with the photos. It can. Let me try to open this. Go. Come on. Really? You can't open this? Oh my god. Well, what was my idea for the Australian dollar versus the yen? So basically, I saw this as a potential inverted edge and shoulders on a daily time frame. And because I have some draws there on a lower time frame, we can actually see this price action at the bottom, at the top. But I was expecting this as a right shoulder, so I will not be surprised to see more downside moment, or at least a retracement forming that right shoulder. We have also a potential cipher pattern. I miss the Fibonacci retracement there at 78% Fibonacci. So basically there's a cipher pattern right above. Let me give you, I need a price there, 83.85. so this will be the bearish cipher pattern completion point on a daily or on a weekly if you wish. And we are now threatening these monthly fractal resistance, and we are actually now trading the weekly fractal support level on a 4 hours time frame. Actually, let me go into a lower time frame, 2 hours time frame. We have this potential butterfly pattern also projected at 74.83. So basically we are now trading below that weekly fractal support, and the completion of this pattern may suggest a bounce from this level. So note that we are approaching also the lows from July, previous structure support. So basically that may act as a potential pressure price zone. So bullish butterfly pattern projected for the Australian dollar versus the yen. Let's see how the market will react from there or from here. Bearish shark pattern printed. Actually, let me show you the major one. Bearish bat pattern at 88% Fibonacci retracement. So we have a major pattern there on a daily, on a 2 hours time frame or a 4 hours time frame. The market ends up being pushed above and forming this weekly fractal resistance at 71.97, and completing this bearish shark pattern, offering this nice bearish momentum. Then a new pattern here, the bullish bat pattern at 88% Fibonacci retracement there. Nice bounce from this Fibonacci retracement level, forming this red bullish bat sequence, bullish bat pattern, offering a retest of the daily fractal. And okay, now we have a clear rejection of that daily fractal and a new lows below the daily fractal. So what I'm waiting for is I need to see how the market will react from this 69.02, so right above the weekly fractal. I need to see how the market will react from this golden Fibonacci extension level. So that is a bullish crab pattern completion point also at 69.02. So let's wait for and see what the New Zealand will, how the New Zealand will react from those price levels. CAD versus the yen. I shared this, I projected this shark pattern, this crab pattern at 78.84. So as you can see, the market has found some support or some pressure around it, very close to that Fibonacci level. We have also one potential ascending trend line support. I will not be surprised to see the invalidation of that pattern and the retest or the reinforcement of this trend line support. But at least at this point, I will not be surprised to see the recovery from this price zone, taking in consideration the bullish crab pattern. So the bullish crab pattern may target the 38% Fibonacci retracement level. So don't expect huge trades trading those sequence. You need to understand the targets, the default targets for those patterns, and you need to start to partitioning your trade and start to close some of your position size, and you need to break even your trade as soon as possible. So usually as soon as the market achieves the default target, I will break even my trade. I close half of my initial position size, and then I keep monitoring the what exceeds from my initial position size. So I will not be surprised to see a bounce from these levels. We are also very close to the 78% Fibonacci retracement level as a potential, as a natural and potential, in this case, support price zone or support Fibonacci level. So let's pay attention to that Canadian dollar. Euro versus the pound. No clear patterns for this pair at this point. I was expecting some pressure below this monthly fractal. The market has recovered that monthly fractal resistance right there, so a recovery of that fractal, and we are now again threatening that monthly fractal resistance. I'm not so sure if the price will recover that, will break again that fractal. Let's wait and see. We have a nice sequence there. Let's see how the market will react. Eventually, this is just a consolidation or a correction, and we will see the price trading breaking below. If that happens, we will see how the market will react as soon as it approaches the weekly fractal resistance with the golden Fibonacci retracement right there. So basically at this point we have no clear patterns here. We can project a bullish bat pattern if the market decides to trade lower. So if the market decides to approach this 88% Fibonacci retracement at 89.14. So if that happens, we will see the completion point of this, or the formation of this bullish bat pattern, and obviously as always we will target the 38% Fibonacci retracement level. So basically the completion of this bullish bat pattern will suggest a retest of the broken or the recovered weekly fractal resistance. So this may act as a support if the price approaches that price zone, and if the price recovers that fractal, it will act again as a resistance. So then if the price completes the bullish bat pattern, the pattern will suggest a retest of that structure, the previous structure, resistance and support. Let's call it kind of a pivot zone if the market decides to reinforce this as a potential support level. So if the price decides to fall and find support here and a bounce, that will turn this resistance into a pivot zone, previous structure resistance. It will act as a support again. Let's wait and see. And then if the market decides to trade below and complete the pattern, we already know which will be the objective. If the market decides to bounce from these levels, a retest of the previous structure support level. Let's wait and see if that happens. Australian dollar, euro versus the Australian dollar. This is what we can call a bearish cipher pattern completion point at 162.90. So that will be the bearish cipher completion point. We never know if the price will actually find pressure at those levels, but we know that and taking in consideration the historical data, we understand that after a specific sequence of Fibonacci variables, we understand that, okay, if the market decides to print that cipher, we will expect a retracement. So again, we will not expect major downside momentum for the pair. We will expect a retracement to the 38% fib as a first target, and then the second target at 61.8. If the market decides to sink, you will activate your trailing stop below the golden Fibonacci retracement at a second target, and below your second target you will trail that position moving forward. So at this point, euro versus Australian dollar very, very close to complete that bearish cipher pattern. Euro versus the New Zealand, I was expecting the formation of this sharp pattern at 224% Fibonacci extension. The market has failed that completion point just by a few points. Actually, we can measure, not because it's relevant, but just because I shared this chart right as soon as the market turns this into a fractal support. So 11 points above the completion point, the market has found some support, and then we are now approaching the default target, the 176.40. So this is the default target for this, or at least the minimum expectation after that bounce. We are also, let me just measure this extension above. I believe it has failed the 127 extension as a default extension below, which means the market has found some pressure between 127, 140 from this wave, and which turns this as a potential, let me just confirm this, I will search for the 161.8 extension, and that will complete this eventual bearish shark pattern at 161.8 extension. So basically a false breakout below the previous structural lows, and followed by an extension above, so the 168 extension. That is the bearish cipher pattern completion point for euro versus the New Zealand. Obviously, to complete that pattern, we will see the price trading or breaking above this trend line resistance. So this is a descending trend line resistance, potential resistance. We never know if that will act as a resistance again, but if that happens, we may see the price falling from below that trend line. A breakout above this trend line, it may print as a outside return, so the market will print, it will find resistance and then back to inside the channel or back inside this trend line or below it. And if that fails, we may see the price rallying above this daily fractal. If that happens, we have also the 224% Fibonacci extension as a potential shark pattern completion point, the second one. The first one will be at the 161.8 extension. If that fails, we may see something inside this range, but with limits at 224% Fibonacci extension. So let's not get surprised with a retest of this daily fractal resistance above for euro versus the New Zealand. Cable or pound versus the Australian dollar. Obviously, it's too soon to project those patterns below, so this is a daily time frame chart. But based on the violation of these most recent trend line support, we should not ignore the potential for more downside momentum for the pair. In the meanwhile, obviously going into a lower time frame, we have this eventual crab pattern, actually eventual butterfly pattern at 175.60. if the market decides to print new lows below the most recent ones. If the market decides to print that pattern, we will expect a bounce from these levels. Or if it fails and if it trades below the daily fractal, actually below the fractal support, the monthly fractal support, if that happens, if the market decides to trade lower, then we will pay attention to the potential crab pattern at 173.53. So let's wait and see what will happen from here. Nothing very specific at this point. Also, the pound versus the New Zealand. This is a 12-hour time frame. There was a bullish crab pattern also printed at the bottom, forcing the recovery from this weekly fractal. And well, this may act as a inverted cup and handle. Let me try to draw that for you. So that this may act as a potential inverted cup and handle formation. So at some point we expect a bounce to form the handle. So, and if that happens, and if that happens, that may offer later, as soon as the market violates below the support, that may offer a nice downside momentum for the pair. But at least I need a bounce and the formation of this handle. Note that we are also trading the highs before this bounce, so that these highs there, this may act as the handle formation, but I'm expecting a few more upside momentum, at least a 38% Fibonacci retracement, at least to form that handle. Let's wait and see. Actually, let me just show you the projection for that edge and shoulders. So, which is the 1/800, the 200% Fibonacci extension, which is now projected below that fractal, that monthly fractal support. So I will not be surprised to see a violation of that support level after the formation, or at least after breaking below this weekly fractal. But as I said before, I'm waiting for at least a 38% Fibonacci retracement to be reached in order to form one handle for the inverted cup and handle formation. The Dixie. I have published, actually I published a monthly fractal, a monthly chart on Twitter. Let me just, I need to close one trade, just give me a second. I'm just trying to observe, because I bought some euro versus dollar at that trend line that I showed you before. So I'm long for euro versus dollar, expecting a bounce. I'm not sure if the market will react from here. Let me just check that chart very quickly, and let me go into a 15 minutes time frame. So I will wait a little bit more. So if the market decides to break support, I will exit my trade. I'm just trying to understand on a 5 minutes time frame. There's a small wedge here, or a pennant. It can be a pennant, but okay, let's wait and see. The Dixie, I shared this, and let me show you also. Let me also show you that for the Dixie, and I want to see this sort by date. It was this one, a monthly chart. I shared this among our community at Forex Analytics. As you know, I publish and I share my insights with the community there, which I invite you to join. I don't need to reinforce that every time, but I invite you to join Forex Analytics, because we offer different type of analysis, actually, between basic technical analysis, Elliott wave perspective, macro analysis, and candlestick pattern formations synced with and also obviously harmonic patterns. So this is the Dixie on a monthly chart, this is a monthly time frame, we are threatening a trend line support, and basically this may act as an inverted head and shoulders. Usually we don't search for an inverted head and shoulders as a trend continuation event. We search for those as a reversal behavior, but it's not the first time that we'll see that formation acting, and we can consider that as an inverted head and shoulders. So we have also a technical double top, so which means that breaking below the previous structure support level, the major support, will trigger that double top. Double top default target at 75.86 and default targets for the inverted head and shoulders at 115.38. So basically those are the targets for those patterns. Obviously the double top will trigger below the support and the inverted head and shoulders will trigger above resistance. We need to wait for that to happen. On a daily, this is a monthly, and I need to show you this one on a weekly, exactly, on a weekly. So basically this is the head for the inverted head and shoulders that I showed you before, and 91.40, so this is the default completion point for the cipher pattern. So we have a bullish cipher pattern on hold at 91.40. Note that we are already nice strength for the Dixie. We are now threatening the daily fractal resistance. Let me show you this on a weekly perspective or a daily perspective. So 91.40, so this is the bullish cipher pattern completion point. We never know if the market will achieve those levels. We are now threatening a trend line, a potential trend line resistance here approaching from above, so I will not be surprised to see the Dixie finding some pressure here, but at the same time a violation of this daily fractal resistance will force or may force a retest of that weekly fractal support, and well, if the market recovers that monthly fractal support, eventually we will see more upside momentum for the Dixie with the next fractal resistance at 97.80, so which may offer some pressure there. But again, trading above the daily fractal may offer a retest of the previous structure support, and trading below the most recent lows and now the weekly fractal support, we have that bullish cipher pattern on hold at 91.40, without ignoring that bearish momentum if the price decides to trade below these previous structure lows, this previous structure support, triggering the technical double top printed above. So let's wait and see what the market will offer at this point for the Dixie. Gold, this is a daily time frame chart. The market has found some pressure at 113% fib, so this is basically the default alt bat pattern completion point. Let's go into a 2 hours time frame chart. I published this, wow, amazing fall from gold. I projected this eventual bullish shark pattern at 224% Fibonacci extension as a potential false breakout below this trend line or below the previous structural lows. As we can see, the market has completely vanished with this trend line, and we are now trading even lower, so which may give sequence to this major bearish alt bat pattern format above. So basically the default target at 1682, so this is the default target for that pattern, the major bat pattern printed above. I will not be surprised to see that happen for the gold. The same may happen for the silver with 2290 as a default target for this shark pattern at 224% Fibonacci extension. I also published it before, actually right after the completion point. I shared the pattern saying, okay, eventually we'll see the silver falling or retracing from this price zone on a lower time frame. Another one that I projected, because we never know what the market will do. another one, two patterns projected, 168 extension, 2592, completely ignored there, and completely ignored a 224% Fibonacci extension. So basically two failed bullish shark patterns. We need to delete these because it makes no sense at all at this point. Default target for the edge and shoulders printed above reached at 2570, below the daily fractal support, and we are now approaching the major edge and shoulders default projection. So there's a minor or a lower degree edge and shoulders there, and a higher or a higher degree time frame edge and shoulders with default targets at 2332. So this is a very nice level for eventual support, a 200% Fibonacci extension, and default target for the edge and shoulders for the silver. The crude oil, I shared this potential bounce above this trend line. So as soon as I saw I saw crude oil finding some support above this fractal, this daily fractal, I started to project patterns above. One of them, obviously, the 127 extension, based on the Fibonacci criteria that we have. I projected the bearish butterfly pattern there. As you can see, there was a small pressure there with just 1 hour, actually 1 hour pressure at 127 extension, and then the market trading above it and finding support at 127 extension, so the completion point acting as a support, and then more upside momentum. I shared both of those possibilities, one of them the 127 extension as a butterfly, and then if that fails, I shared the possibility for a bearish crab pattern at 41.57. So it never happens. The market has failed that pattern just by a few points, and then I projected a retracement from this daily, from this week, not a weekly, for 4 hours time frame fractal resistance. As soon as the market offers me that fractal, I shared this chart saying, okay, eventually we will see crude oil sinking into those default expectations, basically the 38% fib, now adjusted at 39.36, and we are now approaching the 50% or trading between those 38 and 50% Fibonacci retracement levels. Let's wait where let's see if the market will retest that daily fractal support, daily fractal resistance, which may act as support level. 38.33, this is the previous structure resistance, which may act as support for crude oil. SPX also approaching the golden Fibonacci extension and the formation of the bullish crab pattern at this point, at this moment. Also the bullish crab pattern at 32.33. So we have also a major crab pattern there, actually a major shark pattern at 168 extension, so which forms a nice cluster there between those golden Fibonacci levels. We can use also the retracement level. So this is a default expectation for S&P on a 12 hours time frame or a daily time frame chart. So we are now trading below this major ascending trend line. I will see, we may see eventually the SPX trading the 38% fib between monthly fractals, actually between the monthly support and the weekly fractal support above, resistance above. So I will not be surprised to see SPX trading lower than the price that we are now, without ignoring obviously that 32-33 bullish shark pattern, or bullish crab pattern, in fact, projected there as a potential. Again, we never know if the market will react, taking in consideration those patterns. Let's say that the environment at this point will not favor or may not favor longs for S&P at least at this point. But well, I'm just showing you which patterns the market is printing at this point. It doesn't mean that we need to participate, or that I will buy that market just because the market has printed that pattern. We need some other we need other variables, not only a pattern to trade. We need other variables to engage our setups. So, but just to say, we are very close to those bullish shark pattern and completing, actually now completing that bullish crab pattern at 168 extension. German DAX also another, the last chart that I shared, it was this these head and shoulders formation, these minor heads and shoulders, and the violation of this trend line support, triggering more downside momentum, actually now trading below the daily fractal support. And taking in consideration, this is a 2 hours time frame chart, by the way, so in taking in consideration the Fibonacci ratios presented at this point, we should not ignore the eventual and the default bullish bat pattern at 88% Fibonacci retracement. So this is where the pattern will complete. Let's see how it will behave. Obviously, when I project a bat pattern, I always like to project the alt bat pattern at 113 and the crab pattern at 168 extension, because the same Fibonacci measurements, so the same swing that we measure to identify the bullish bat pattern completion point is the same swing that we use to identify the alt bat pattern and the crab pattern extended to the 168 extension. So if the bat pattern fails you, just scrap it. That's the quote that I use for the bat, the alt bat pattern and the crab pattern. If the bat pattern fails you, as in this case as support above the fractal or below the fractal, just a few points below the fractal, if this fails, we may see SPX or the DAX actually falling into this 1142, which is the crab pattern completion point. The first level that we should pay attention for, 88% Fibonacci retracement, 1234. So this is where the market will complete that default bullish bat pattern completion point. Now I have a few other charts to show you. This is bonds, bunds, and Bitcoin and Ethereum. The bonds are now threatening the trend line resistance. It never happens. I was expecting a return. I do not expect the market to sink or to rise in the direction of those projected patterns. I need to wait for them to complete. But what was certain, the market never complete these patterns below. It can sink and complete the patterns below, at least. If the market decides to respect this daily fractal and sink again, we may see those patterns formed below. But at this point, and breaking above this trend line resistance and now threatening the daily fractal resistance, we should not ignore the potential for more upside momentum. If that happens, and again, we never know if that will happen, but if that happens and the market may suggest more upside momentum for the bonds, if that happens, I will pay attention to 114 and 140.05 and 140.15. So those are the 127% Fibonacci extension as this bearish butterfly pattern, the red one, the bearish butterfly pattern. And if that fails, we may see an extension to the 161.8 extension, which will put the price trading the bearish a bearish crab pattern. So this same red bearish butterfly will turn or will transform, let's say, into a bearish crab pattern above. If that happens, we will put we will see the price trading very close to the default target for these edge and shoulders, in the inverted edge and shoulders printed there. So basically this will act as a neck zone above the weekly fractal. If that happens, we may see also the default target for the edge and shoulders projected there at 140.20, the 200% Fibonacci extension. So let's wait and see. But before that happens, we must pay attention to some of those levels. Basically, we have a convergence or a cluster zone between 140.11 and 140.15, so $5 above. And so this this makes this cluster my attention box. So that's when the price starts to approach that cluster box, I will start to pay attention for the bonds. And the bonds also, let me try to show you, also trading above these most recent daily fractal and trend line resistance and approaching one descending trend line, or at least one eventual trend line resistance. Let me adjust this trend line right there. So basically we may see a reinforcement of that trend line, the 50% retracement after a fall from this edge and shoulders formation there. The default target for that edge and shoulders not reached at this point, 172.54. That was the default projection for the edge and shoulders printed above. So, but again, let's not ignore more upside momentum and the reinforcement of this trend line resistance approaching from above. Let's see how the market will behave. Again, bearish bat pattern, or previously a bearish bat pattern, was printed at 177.95, 88% Fibonacci retracement. As we can see, one amazing reaction from this price, or from this Fibonacci level. Bitcoin and Ethereum, just to finish with my presentation for today after this sequence of charts. The Bitcoin, let me show you my daily perspective for Bitcoin. I was not expecting that kind of reaction from the 78% fib. This is a cipher pattern, by the way. I was not expecting, as soon as the market violates this major trend line resistance, I was expecting some more strength, or actually a strength market for Bitcoin, or a strength momentum for Bitcoin. But what is certain is the market has found some pressure at 78% fib. So basically it may act as a cipher pattern, actually acting as a cipher pattern, forcing the price to sink, and the default target for the cipher at 91.82. So this may act as a support level, we never know. Again, inverted edge and shoulders, default projection for the inverted edge and shoulders at 15.024. So this is the default target for the inverted edge and shoulders printed below. Obviously, if the market decides to sink, it will invalidate the pattern, and we will not target. We will not target that price zone again. So, if the market decides to trade above the most recent weekly fractal resistance, we have a bearish shark pattern projected at 14,611. So basically that is the default shark pattern completion point, and obviously later the price, or even if the price decides to go directly to the 224, that will also print the shark pattern at 224% Fibonacci extension. So we have those two levels as a potential shark pattern completion point. Obviously the first one that we should pay attention, converging with the inverted edge and shoulders default target, the shark pattern at 1461 or 611. So this will be the default target for that pattern. So I hope you enjoyed this video. If you do, please press that like button. It's always nice to get your feedback, at least in terms of a like. It's always nice to get your feedback. I hope you enjoy it. I will try to share more videos with you. Again, this is not the objective of those videos are not to push you inside the market. Is to force you to learn first, learn the patterns, learn the price behavior, the price action. Try to understand. I use Fibonacci extension and retracement levels. I use the fractals to trade also. Identify not only those advanced pattern formations as the bat or the shark or the Gartley pattern, whatever. I also trade basic setups as a triangle or as a breakout of a flag or a head and shoulders, a cup and handle formation, whatever you find. You need to try to identify those price behaviors, apply a strategy to trade them, and if you are not trading for for quite a long time already, if you are trying to learn process, try to trade on a demo account. Try to apply that discipline that you have learned with those patterns, and try to apply them that strategy on a demo account. And then when you start to feel comfortable with those patterns, you understand the patterns. Okay, I understand the shark pattern should retrace to the 50%. I understand that the cipher pattern usually retrace to the 38% fib, where I should put my stops to protect my capital, where should I start to partitioning my trades, where I should start to break even my trades. All that stuff together will create your strategy to trade. Once you feel comfortable, try to embrace the market on a real account, but not before that. If you start to trade randomly, you will lose your account, and that is 100% sure. You will lose your account if you don't practice, if you don't trade it on a demo account, or if you don't learn process. For sure you will lose your account, and I'm telling you this by experience, because I work with a lot of traders. I work with a lot of people committing the same mistakes over and over again, and we should avoid those mistakes when we start to learn those process. If you learn process, and if you are capable to identify those price behaviors, and if you are capable to develop and to create and to develop your trading strategy, your risk strategy to trade those patterns, you will survive inside the market. If you don't have that discipline, forget that job. If you want to make this as your job, as I work with the market, I decided to quit my jobs to work with the market. And basically, if you don't have that discipline, stay away, learn first, and it will take a lot of time and effort to learn all those processes, and actually to create a disciplined process to observe, to analyze your markets, and to engage or to participate on those trades. So again, this video is not to force you to participate. It's obviously one process that I want to share with you for you to learn and to practice. And then obviously, if you have questions, just send me an email. You have my email address on my webpage at tradingjazzfx.com. You have my email address. You can always contact me, and you can always find me on Twitter. Try to contact me. I have all the pleasure to share my thoughts and my disciplined process with you. I have no issues with that. So basically, learn first and trade later. I hope you enjoyed this video, everyone. Stay well. Have a nice trading week for those who are trading the markets already. All the possible luck. I don't trade based on luck, but I wish you luck trading those markets, because sometimes you need also that a small portion of luck. And that being said, well, I wish you all the best for you and your families. I hope you enjoy, and see you the next time.